there are plenty of stocks that are fan favorites of people. I think of something like a SoFi or an Nvidia. Certainly as of late, Nvidia it's done so well. Everyone that's hold it has made a lot of money. So it makes sense why people really gravitate towards that. Today, I'm going to be taking a look at maybe the exact opposite. Not all of these stocks people just hate, but these are all stocks that it's kind of a contrarian opinion to be at least moderately high on that. All these, I'm not saying they're going to shoot up immediately, but I'm going to make a case for many of these stocks why I kind of like them. I kind of like them. And there's nothing inherently political with this. Of course, this is just analyzing stocks, and I could understand why that, because Pfizer, you all know what I'm talking about. So, but just looking at the stock itself. So 5 years, minus 26%, not that great, obviously. I mean, we're at 25 here, but during COVID, it peaked around 60. So yeah, there was a lot of upside here at one point. But what I'm looking at particularly is that nearly 7% dividend yield. That is quite excellent, actually. And if you zoom out, since what? Right around the year 1997, nearly 30 years ago, this stock has kind of gone up and down between that 60, right? That was the highest peak, but let's just be a little bit lower than that. Let's say 50, and then a floor around 2009 and 11. Since then, we have just bounced within that range, and you can collect a nice dividend during that time. So if you're holding Pfizer long term, what you will probably expect to see is 6%. Maybe it doesn't even stay near the 7%. 6%, 5% dividend yield long term. That's not bad at all. And the likelihood that this is the highest Pfizer ever is certainly possible. I think it's pretty unlikely. So if you're telling me there's a potential, hey, this stock hits 35 in 2, 3, 4 years, that's a pretty good chance. And in the meantime, you're getting a relatively high dividend as well. Now, the contrarian part of that is they haven't done particularly well. That's why the stock is down as of late. There's a lot of competition in the pharmaceutical industry that has kind of kicked their butt. Maybe look at Eli Lilly or Novo Nordisk. Those have both done particularly very well over the last 5-ish years. Certainly if you look longer than that. My mouse is wigging out, but that's all I really got for Pfizer, so on to the next one. So this one might be fairly controversial, and unfortunately I don't have time to dive into every concept in this specific covering of Hershey, but let's just dive into it and start off. So Hershey has not been doing well since cocoa prices have absolutely skyrocketed. This is a 25-year chart, and you can tell, it's gone up a bunch. So people are down and out on Hershey's. However, over the long term, I think it's going to be fine. Cocoa prices, from what I did research, and believe it or not, I am not an expert on this. I am not a cocoa price channel. That's not what I cover. But from the research I did, it's mainly so high because the crops basically got destroyed, bad weather, that sort of thing happens. Actually, quite often you see that in all sorts of commodities, obviously not just this one, but specifically it wasn't a super high profit margin business. Anyways, it wasn't super profitable, so there wasn't a whole lot. So now that a lot of them got destroyed, there's a huge shortage, a huge shortage. But in the long term, it should equalize. It should find an equilibrium. People should reinvest into it. People will realize, hey, I can make money doing it. The crops, they'll have a better year. Eventually, it might not be this year. It might not be 2 years. It might be 5 years even plus. However, Hershey's eventually will recover. There's another concept. It's when people are out on a stock, you do better if it does well than if people were in on a stock and it did well. Doesn't mean you have to get in on stocks that suck. I'm not saying that. However, if you find one you think people are out on, maybe aren't super hot on, and you get in on it and it does well, you're going to do better. Also simple concept. So I think, and you get a 3.5% dividend yield in the meantime, even if this ran flat for a while. It is also not crazy high. PE, not surprising because it's fallen so much, but there's a lot there. And like I said, I don't have time to dive into everything super deep, but there's one last concept I want to cover with Hershey's, and it's a little bit interesting. How do I want to explain this? So when you have prices skyrocket, and obviously Hershey's has to either raise prices or make a lot less money off what they're selling because the prices skyrocketed. Their margins dramatically shrink. That's not a good thing, but it's going to price out some competition. What do I mean by that? Is companies that are smaller, don't have the name brand, don't have all the contracts in all the different stores. People know Hershey and it's just name brand. It's going to be around. It's just reality. A lot of the other companies that are smaller, might get priced out. They might go bankrupt. There's a lot of companies that might start up and get priced out. Now, it's a little bit of a different situation, but it's kind of the example of why Tesla doesn't like EV tax breaks, which sounds counterintuitive. They're the biggest EV seller. Why wouldn't they want people buying EVs? Well, actually, it's a lot more beneficial in the long term for Tesla to have companies like Rivian go bankrupt and not exist and not compete with them than it is to just get, a little bit more people buying Tesla now because they get a tax break on it. So it's obviously a different concept, because in this example, Hershey isn't choosing it. It's not a government contract. It's more like hurting them than it is helping them in the short term. Obviously, you don't want your company to get hurt, but in the long term, it might not even be that bad of a thing. Now, if it was like 7 years, yeah, that would be pretty rough. But I think they're a big enough brand, a big enough company that they can make it through. So that's all I got with Hershey. Feel free to disagree. I'm not like 100% putting my foot down with this one, but I see an opportunity here in the long term. So Dell is the last stock we're going to be looking at today, and you may have some hesitation here. You might say, okay, this stock is up 326% in 5 years. What do you mean people hate this stock? Now, maybe it's not like bottom of the barrel right now. People are just like dunking on Dell every second of every day. I'm not saying that. However, if you're looking at this company generally, you're zooming out a bit over the last 5 years, and you're looking at more historically, they haven't been the most successfully run company, and that might be a bit of an understatement. In 2013, they went private. Also, I covered this in a video if you're interested in it very recently, but they went private, not that specific thing, but this stock in general. They went private again in 2013, almost never a good sign unless you're a very, very small company. But Dell is not really that small. They've done very well the last 5 years, even zooming out since they went public. Again, this chart might be off. Specifically, it's iffy, but still, they've done very, very well since they went public again. That is true. And you might be saying, okay, so what are we missing here? Well, we're just looking at reality. So they're valued at about an $80 billion market cap. If we go to financials here, their revenue is $88 billion. Obviously, they're making a decent amount of profit on that. Their operating income, $5 million. It's actually a bit lower. Their PE, if you look at non-GAAP, which you can't calculate PE off of, at least not as a company, display that is not legal. However, it's a lot closer to 10 than it is to 20. So this is a company that they're growing earnings per share fairly fast, but their revenue's fairly stagnant. They've been a stagnant business for a number of years, but they're starting to turn things around. So when people look at a company like an Intel, for example, and they say, man, if they just turned it around, how much they would be worth. Dell is the exact same thing, except we're actually starting to kind of see it. With Intel, we don't know. We're still waiting on it. Are they going to be able to get the, fabrication of chips started up? Are they going to make money from that? They could. Are they going to start gaining some or making decent profit margins? Are they going to gain some of the CPU market back from AMD? I know they're still dominant, Intel is, but they're losing percentage-wise year after year. We're waiting for that with Intel. With Dell, we're kind of seeing it. They're in a really good spot, specifically with the market, or not the market, the stock market, but just what they sell in general, the data centers. They are integrated in data centers. Maybe they don't make enough profit of what they're selling in data centers, but they are there, and that's very, very, very important. So that's what I see now. The downside is I'm still not convinced the company is above average. They might be still a poorly run company in just a very good environment for what the stock does specifically. That's the downside. If that's truly the case, then you probably won't do super well until in the long term. However, they can turn it around. They can increase that profit margin. If they can start growing revenue like a normal company, there is a lot of upside, because this is, like I said, going off of just strictly how much they're bringing in. If you look at non-GAP, this stock is about 33% of that of the S&P 500. That's just how it is, because the S&P 500 PE is about 30. They're at, like I said, somewhere it's closer to 12, right? That forward PE is fairly accurate to what their actual PE is. Fairly. Please do your own research, just estimates. I just cover the stock, but off the top of my head. So I think Dell, if they can just become they don't have to be a great company. As long as they aren't a bottom 30% company, you can do probably well on Dell. That's all you have to do. The issue is, historically, they have kind of been a bottom 30% company in terms of growing and just being successful. But anyways, That's all I got in this video, guys. If you enjoyed, appreciate if you like and subscribe. I do daily stock content on this channel. I appreciate all of you for watching. I'll catch you next time.